Miami Condo Mondays is a live podcast on the first workday of the week at 4 p.m. South Florida time. The program features former journalist and current Wall Street consultant Peter Zaleski of the Miami Condo Investing Club and former lender and veteran condo broker Jenny Huertas of CVRRealty.com. Recorded weekly in greater downtown Miami, this 1-hour discussion will provide a refreshing and sometimes controversial perspective on the state of the South Florida condo market from a pair of seasoned real estate professionals who do not always agree. The program won't tell you what to think about the South Florida condo market, but will give you something to think about before buying, selling, taking listings, or financing units. This podcast is not authorized by the Miami real estate industry and will quite possibly annoy many of its figureheads. Welcome to this week's episode of Miami Condo Mondays, broadcast live on the social media accounts of Peter Zaleski and Jenny Huertas.
Happy Monday, Miami. It's Miami Condo Mondays, a 1-hour conversation about what's going on in the condo market. Tri-County, South Florida area of Miami-Dade, Broward, Palm Beach County. I'm Peter Zaleski, condo consultant, expert witness, founder of the Miami Condo Investing Club. I'm joined by my partner, my co-host, Jenny Huertas, broker owner of CVR Realty. Make sure you check out our website, cvrrealty.com. Jenny, 25 days left in the 2025-2026 South Florida winter buying season, which goes from November through April. This is the time when people come to town, Jenny. They come here for an event. They come here for a vacation. They come here for a cruise. And you know what they end up doing? They end up thinking, maybe I ought to buy a condo. They go shopping for condos. Many of them ultimately close. At the end of the process, they close sometime in the summer buying season, which will go from May through October. Jenny, the problem with the summer buying season, you got heat, you got humidity, you also got hurricane warnings. So a lot of buyers tend to go by the wayside, and the only people still standing are those that are driven by data and looking for a deal. I get any of that wrong, Jenny?
No, you're absolutely right. And this winter passed really fast. I mean, I'm just surprised already April. Happy
It's
Easter,
already
by the way.
April. But listen,
Yeah.
fittingly, for winter, you have a winter cold. We're 25 days away from the summer, and you're getting a cold. How's that possible?
Yeah, I guess it's a spring cold.
A
I don't
spring
know.
cold. Okay.
I don't know.
All
It's
right.
hanging out somewhere, and I catch it somewhere. But I'm okay. I survive.
Jenny, for this week's podcast, we're going to base it on a newsletter that we put out yesterday. We've been doing the Miami Condo Market Intelligence Board, been doing it since 2007. We're talking 19 years. This week's report's talking about how South Florida condo sales are up. And you know what happened? Prices are down, just like we said was going to happen based on our South Florida Condo Association Financial Cliff Index. That index, which basically is tracking active listings, pending sales, giving everybody an idea which one is outpacing the other. If pending sales are going up, that means the market's going up. If active listings are going up, that means the market on our index is going down. They kind of work in tandem, teeter-totter. So if you're a buyer, you want basically a lower number. And if you're a seller, you basically want a higher number. Jenny, we were telling people what to expect. We came into winter. We said first half of the winter, what was going to happen? Those who needed to get out, they were going to cut bait and they were going to bail. Second half of the winter, which basically was marked by about February the 1st or so, symbolically by the president's holiday weekend. That long weekend on about the 16th of February, we had the Coconut Grove Arts Festival, you had the Miami Beach International Boat Show. We said those people who couldn't find a buyer by that time, they're probably going to cut price and head for the exit. And you know what? It's happening.
Yes, they had to. And those are the smart sellers. The ones that wait until the summer, they're going to have to lower the price even more. So they jump out of the ship first. So they got that advantage.
Jenny, today what we're going to talk about, we're going to talk about the South Florida condo market overall, what's going on the sales side as well as the price side. Remember, everybody, sales went up. Why? Because prices came down. But we're also going to drill down into Coral Gables. It's that high-end suburb located immediately west of Miami. The reason we're doing Coral Gables this week, and by the way, I should tell you, Coral Gable pricing year over year down 9% price per square foot. 9% drop. And you know what's happening in the Gables? The sales are actually down as well. Other markets, we're seeing the sales go up as the prices go down. In the Gables, the sales are falling as well as the prices are falling. Reason we're focused on Coral Gables, Jenny, We got a tour. We got the season finale of our Coral Gables condo correction walking tour. We're doing it this Saturday at 10 o'clock. We're going to go till about 1 o'clock. We're going to wander about 4 miles or so, moderate pace, stops along the way. Give everybody a list of all the condo projects that exist in Coral Gables. We'll teach you how to analyze condo projects. We'll teach you how to identify opportunities as well as spot value traps so you avoid them. Tell you some history, get some steps in. You'll have basically some fun before the heat, the humidity, and their hurricane warnings come rolling in. So anybody's interested in going on a tour, make sure you go to miamicondo.club. Up at the top, you'll see tours, or go directly to the ticketing agency, which is Eventbrite. And the way you get there is you go to miamicondoclub.eventbrite.com. Jenny, you looking forward to the season finale of the Coral Gables Condo Correction Walking Tour this Saturday?
Yes, absolutely. It's always interesting. We always find something new, I'm sure. The stats changed because that was back in February.
Yeah, February, about 2 months ago.
2 months ago, and the stats had changed already. So that's interesting. Seems like the sellers are holding up stronger on their willing to hold on into the price.
Yeah, it really does seem like that. And anybody's wondering about Coral Gables, we're tracking somewhere in the vicinity of about 16,000 units. Who would have thought in the Gables you'd have that many units? But that's what's out there. They're all tucked away in smaller little projects, but there's a ton of them. There's so many of them that ultimately, the market is doing what the market's doing. But one thing it's doing is nobody's buying, at least at the same pace, condos in Coral Gables, and the pricing that they're paying, it's less this year than it was a year ago. How would you have liked to have been, Jenny, one of those buyers who bought last year and said, the trees go to the moon, everything is going to be great. And then you turn around and you look a year later, you're down 10% average price per square foot.
You probably not be happy if you learn. Normally, when you have the feeling that you overpay, you probably want to avoid anything that has to do with the price of the property a year later. That usually happens.
And what if you have a significant other? You know that what that other significant other is saying, I told you that was going to happen. I told you we paid too much. I told you we were rushing in. We should have waited. You're not going to live that down until the price ultimately comes back. But who's to say when the price is going to come back? That's one of the things I want to discuss today. The price drop we're seeing today, does this mean it's the bottom? Does this mean it's simply the beginning? Where do we kind of go from here? That's what Jenny and I are going to be kicking around over the course of the next hour.
Yes, absolutely. I think the three more used words in couples after I love you is I told you so.
I told you so. I told you, or I told you so. Interesting. Jen, walk everybody through it. We got about 25 days left in April. As we get into April, then May's going to be coming. School will be getting out. Universities will be getting out. People will be focusing their time and their effort, their energy on maybe vacations or travel, or maybe just getting away from the heat. They're probably going to be going up to the Hamptons in New York. They might be going over to Europe, assuming they don't have any problems with what's going on with the war against Iran. We got a big deadline coming up tomorrow. President Trump has announced he's basically going to take Iran back to the Stone Age days, if in fact they don't bend the knee and capitulate. Got a lot of uncertainty. We got mortgage rates going up. All of these things that's supposed to be coming around, it's not necessarily working out that way. And as a result, you are seeing sales increase, but the only way sellers are able to get out is they got to cut their price. And because they're cutting their price, therefore you're getting buyers stepping up and taking a shot. But increasingly, I don't know how many of these buyers are actually getting financing because mortgages are simply so high right now compared to where they were. February the 27th, the day before the attack against Iran, 30-year fixed rate mortgage came in at 5.99%. Now, north of in and around 6.5%. Now we'll look it up as we speak, Jenny. But how much do you think mortgage rates are having an impact on the overall market today?
Yeah, I think it's both. It's the mortgage rates, it's the gasoline price, it's the war. It's very, as you say, uncertain. One day the news are this, the next day the market goes up. It's a little crazy out there. So that actually affect our market or affect the psychology of buyers or sellers. So yes, we saw activity, but we probably would see more if the circumstances were more, flat or normal. So that's definitely has an impact. And as far as if the people is getting loans still, the people will still get loans if the price is right, because they can refi and get like if something happens, like a really lower rate, but the people still will lend money.
Yeah. Well, and anybody wondering of what the Mortgage News Daily, and that's a site that's used by a lot of journalists, Mortgage News Daily, in order to track mortgage rates, 30-year fixed, coming in at 6.43. Remember, everybody, a month ago, February the 27th or so, a little bit over a month, they were 5.99. There were some 5 handle beginning with that mortgage, and now it's 6. It had gotten north of 6.5. Now it's coming at 6.43. Obviously, this stuff fluctuates. But the real risk is, what's going to happen with the economy? Me as a lender, if I'm going to put financing out on the street, is that person going to have their job? Are they going to lose their job? Are we going to see a shrinking of the economy? We had some good financial numbers last week talking about how job growth had actually increased. So, it's going in so many different directions. Nobody really kind of knows what to do. And then you throw in the Iran situation. You got the back and forth between whatever regime is over there, as well as, the White House. And it just kind of, it kind of makes you pause and says, okay, let me let this thing play out. Once it plays out, then I'll turn around and I'll make a decision. Jen, don't you think that's a logical approach probably a lot of people are taking?
Absolutely. And we know this for a fact. We have clients that say, let's wait a couple months. I like this product, and since the prices are still holding up in some cases, they're still not selling.
Yes.
So there is a room for waiting. It's not like this is the last unit in the whole market. So in that sense, they have the advantage of waiting because there are more units similar or something they can compromise if they wait. So yes, there are some people waiting. Some people made the decision based on the good price or good opportunity, good location, or a building that is well maintained, or a house that is well kept. So yeah, the things are moving, but I think the pace should be faster if everything was normal.
Yeah. Interesting. Jen, another issue that sort of comes up is just the U.S. dollar. I mean, we're in a market, Miami-Dade County especially, but South Florida overall, north of 6 million people, about 42% are foreign born. If you go to Miami-Dade County, more than 50% of this county is foreign born. And as a result of that, you got cultural affinity. Somebody comes here, they buy, their friends, their family come to visit, they think about buying and things, so on and so forth. So it really sort of contributes to a bunch of different things. We all know what's going on the immigration side. We know about the pop-up detention center called Alligator Alcatraz, built in the middle of the Everglades, about 50 miles due west of Brickell City Center, which is effectively at 8th Street or Calle in Brickell Avenue. But also, too, Jen, what's going on sort of, too, is the U.S. dollar. U.S. dollar, believe it or not, it's actually strengthened. The day before the attack against Iran, if you came here with a euro to the United States, you got $1.18 back with 1 euro. Today, you're getting $1.15. Granted, it's going to be different in Latin America. It'll be different in the Caribbean. It'll be different all over the world. Right. But what this said is the dollar's actually gotten stronger, which could be happening for a variety of different reasons. But that sort of surprises me, and it kind of makes real estate that much more challenging because now you got to deal with, you got less buying power, and it's all happened basically since Iran. I don't know if that is a reflection about what could happen to the global economy because a place like Europe is so dependent upon oil coming from different places versus the United States, which is much more self-sufficient. But, these are some of the issues. The dollar-euro currency, the FX, if you will. So, Jen, any of your clients ever talk to you about the currency exchange? Is that a factor for them, or is that just something, maybe out there in the peripheral for kind of the macroeconomists?
Yeah, some of them do care because it is like against Colombian peso, which is what the people is mostly looking here from Colombia. Yep. And they were very excited about the peso getting stronger. Yep. And the difference in right now is still favorable for them. But yes, it's something that they do care. But at the end of the day, prices are more important in that sense. If the prices go low enough, it doesn't matter, because that fluctuates. Sometimes even a stronger dollar is an advantage or disadvantage depending on what time you resell the property. So, it's not, it is important, obviously, but it's not as important as you would think. like they will still buy here even when the dollar is stronger.
Yeah. It's kind of interesting, Jenny, kind of looking at all of this and everything involved. Like, just kind of give everybody the big picture before we start to drill into the numbers. What happened is back in June of 2021, you had that tower go down at Surfside at Champlain Towers South. It collapsed. Nearly 100 people died. A $1 billion settlement was paid out to families of victims. As a result of that, all kind of legislation went in place. The legislation is primarily about transparency, making information available, not only on the condo board side, but also in terms of the inspections of the buildings and sharing that information. Anybody who owns there, as well as anybody who prospectively could be buying there. And the people doing the inspections are licensed architects, licensed engineers. So the way it goes forward now, and you should check with your attorney, if you have a structural engineer, check with them. Basically, every 10 years, a building is going to undergo an inspection. Every 10 years, it's called a structural integrity reserve study. When you get to the 30-year mark in a building, it'll be called the milestone inspection. But every 10 years, basically, you're getting a special assessment. At the 30-year mark, you're going to get even a bigger special assessment. Our guesstimates are, if your building is up to 4 stories, call it $25,000 special assessment. If you're 5 to 14, 65 grand, 15 stories or higher, $100,000 special assessment. And that's a lot to have to pay. But many of these special assessments started to kick in 2026, just a few months ago. The reason they did is the legislation earmarked it in such a way where suddenly 2026, the associations either had to collect money through capital reserves and or they had to take out a loan. Problem with the loans, Jenny, interest rates are north of 9%, so it's very expensive money. Therefore, associations are saying, let's go ahead, we'll pass a special assessment. But how the hell do you come up with $100,000 in a year? You got 12 months to pay. If you can't come up with the money, the association in theory can foreclose. Now, if the association's foreclosing, that means everybody else has got to somehow pick up the cash to allow things to go forward. And this is where the rubbers meet in the road in terms of they've identified the issues in the buildings. Now you actually got to pay for it. Now you got to pay for all of those years where they deferred maintenance. They were kicking a can. And what that's doing is that is forcing people to head for the exits. Am I getting anything wrong there, Jen?
Yes, a few years even before 2021, when this tragedy happened, we didn't have to worry about it that much. I mean, we talk about the 40-year certification. That was a big one that you want the people to pay the assessment. What I'm noticing lately is that the condo associations are forcing the seller to pay the assessment at closing. So that's something that you have to negotiate in the price. So the existing assessment has to be paid because they don't want to deal with a new owner that they don't know what the situation is. It's the perfect segue for them to get all the money at once and don't have to defer this into a loan that is going to cost the association more. So that way the association would save some interest because they are reselling these units. It's incredible how much we have to know about the condo market, not only after Southside, but also because of the state of the economy. We never had to learn so much about politics, worldwide wars. It's just the craziness. We just had to absorb all this information and to have a real picture of what the people need to expect.
Yes. Yeah. What the real people need to expect. Jen, in anticipation of all this, what we did back in January the 1st of 2025, in anticipation of what we call the Florida Condo Association Financial Cliff. What do we mean by that? That means you're in a building and all of a sudden everything starts crumbling around you financially. Why? Because suddenly costs go up. Your maintenance has gone up. You get a special assessment. You get hit with the insurance. Insurance is pulled back this year, but that's because there's a quiet hurricane season. But it's still much higher than it was prior to the Surfside tragedy back in June of 2021. So as you're doing that, some people fall out. They can't necessarily afford to pay their fees, or they decide not to pay their fees. Therefore, fewer people have to cover the same amount until the foreclosure can work its way out. And then what happens? They start to cut services because they can't make everything happen. So you basically have a worse quality of life, and it's costing you more because the whole thing starts to unravel. I tell stories about during the Great Recession. We would go to buildings and every other light bulb would be unscrewed because they were trying to save money on electricity. They would turn off the security cameras because it cost too much. They got rid of the security guards or they put them on limited hours. Swimming pools are closed. This is what happens in a cliff, and that's kind of what we're in the process of doing. So the sellers who are heading for the exits right now, they know the only way they're getting out they got to cut their price. And if some of them have equity built in because they've owned them so long, they're able to take the haircut. Those people who bought there in 2021, 2022, 2023, when you didn't have to wear a mask in me in Florida, you could work from home, and you went to Miami Beach to work on a police car. Those are the people who were basically up against it because they paid top dollar. They were the ones who were outbidding others for a condo. And if they won, they got to overpay. That was the reward. And now suddenly these people are up against it because many of these companies call them back up to Wall Street. They call them back up to Silicon Valley. They're trying to rent out their units that they bought in 21, 2022, and 2023, and they're not able to get it. So we got this real issue. Jen, we have this index. I told you, we created the index, South Florida Condo Cliff Index. It tracks active listings, pending sales. We also do it for vintage, which is those buildings that are at least 30 years old. They go under greater scrutiny. So what we were seeing with the index is all of it. Well, you know what? Let me show you what we were seeing, and then we'll walk you through it before we get into statistics, because all of this is going to suddenly make sense, and it's going to reinforce our call coming into the winter. So yes, I do want to take a victory lap because we've been calling a lot of stuff. Not that we're smart, but all this stuff is to be expected. So let me go ahead and share the screen, Judge, so everybody can just sort of see it, what we're talking about here. There we go. You guys should see it right now. So what we're looking at is we're looking at our index. This is the index. Let me see if I can bump that up, make it a little bit bigger for everybody. See if you guys will appreciate if it's bigger. Well, that's a little bit too big. Where is it? Nope, that's Palm Beach. And there we go. Is that big enough? Let's see. We'll do one more. It's about the same. It's not necessarily doing that. Okay, bear with me. There we go. All right, so we're going to go with that. So, Jen, what we're looking at here is we're looking at what happens when pending sales go up and active listings go down. If pending sales are growing faster than active listings, the index gets stronger. If active listings are outpacing pending sales, meaning the market's getting flooded, it's going to go down. So what we saw is we were meandering around. We saw a little bit of a drop here in and around the beginning or the end of the year. It kind of went down. And since then, Jenny, since January, basically 3 months, we have been on a rocket ship. Green is going to be Palm Beach County, black will be South Florida, blue will be Miami-Dade County, and orange is going to be Broward County. Now, Jen, think about this. November, December, the index starts to go down. There's more listings than pending sales. Come January, the index goes up. Why? Because you got increased pending sales and you got a reduction in active listings. Now, before you answer something, let me show you vintage. These are the ones at least 30 years old or older. We're going to take you there. And what do you can see there? You can see too, again, right around the end of the year. This is about New Year's right here. You can make that out. Now, boom, we're going up. What are we doing? November, December, we go down. January, we go up. Why? All of a sudden, all of the special assessments, all of the maintenance fees, the insurance, everything that's due, it all takes effect. It all becomes adopted. Yeah. Now buyers are like, okay, now I know what I'm getting into. Let me go ahead and do it. And sellers realize, oh no, now I know what I'm into. And then they start to cut the price. And as a result, you see the index go up because sellers are heading for the exits. Buyers are taking advantage of some of the deals that are out there on the street. What do you think of that premise, Jen?
Yeah, I definitely agree. And it's not because we have, because we have a crystal ball or anything. We just do not ignore the signs. We see the trends and we inform the public.